Try this again. Video archive 49, LPSN long. Entry $1.27. Exit $1.47. Gain 15.75%. Trade duration 4 trading days. Share my screen with you folks and with future me. What's up, future me? Better be managing that risk, boy. All right, on the screen is my trade. This is a pretty straightforward trade and a trade based off historical knowledge and familiarity with this asset specifically. What I'm going to do here is delete this fib and drop a horizontal at this level. As you can see, we're going to ignore all of the price action beyond this point. Look at this. Wick, 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 wick. Resistance. Price falling and then small reaction before failing through and coming back up to retest. So clearly you can see resistance, support here, except for that one wick below it. There's some body closes right here before up and back down. So you can see 128 is clearly a significant level. Actually, let's go all the way over here and let's just quickly up. Oh, look at that. Look at that. You see this? 2009, 2001, 2002 to the penny almost. So clearly that level is significant. So I had my order set at 128 because price was above, and I figured it will act as support. We'll get some sort of reaction when we come back down there. And as you can see, price did. It went slightly lower. It went as low as 122, which when I say 128, arguably the zone is really 122 to 128, but you can see there's this gap here, so it makes sense it came down to 122. But anyway, I had my order set at 128, which happened to be, or 127, which happened to be the 50-period moving average on the 4-hour. It happened to be the 50% retrace from this move. And on the 4-hour, you can see here, the RSI had a, well, not technically divergence, but the fact that we had a quick reaction back above the 50-period moving average there, and we held the 200 on the 1-hour. You can see right here, wick down to it. Actually put in divergence on the 1-hour here. As you can see, I'm going to quickly highlight that. Boom, boom. Then there's also across these lows, pretty close. Either way, the main idea was I was just looking at the horizontal level and that fib retracement and trading off the reaction. The goal was to trade it back to the center line. As you can see, we did get that full expression of the move. I did not take it all the way there. I ended up exiting at 147, which was this previous high. I just took my 16%. I was happy with it. The nature of the trade was a day trade, swing trade, just a quick little in and out. As you can see on the 1-hour here, yeah, I think actually I'm not, let's go to 15 minutes. It's a bit clearer. It's not really there on the hour. Anyway, I was just worried about this continuation divergence across these highs, right? We couldn't break into the bullish control zone and we had that divergence, which ended up, missing. I ended up missing out on what, another 10 cents on the trade per share, but I was happy with my profits. And I guess something I could have done better would have been to follow with a stop loss, right? If I had, it's the shortcut for array. Alt J. Probably should have set one there and then moved it up to there. And then if I had done that, if I had done that, I would have ended up getting out at a lower level. But I sacrificed the potential of taking back the center line and moving up to a higher high and filling the gap. And go for it right here. But once we fell below the center line here, now I'm expecting a move towards the bottom. So I got out of the trade, took my profits, and ran. That's it. That's my trade.